Hooty hoo, all my stock market gamblers. I'm Tall Mike, and we have so much to talk about today. A lot of you missed my regular introduction, so I decided to bring it back. I didn't realize it was popular. I like saying hooty hoo, all my stock market gamblers. But anyways, I want people to know that the channel's more than just the stock market, so I did change the channel name to Tall Mike Talks, as most of you know. Well, let's get started with the stock market. We made it to the end of the week. It's Friday. It's options expiration day. A lot going on. Okay, so we got the Dow down about 30, NASDAQ up about 10. Kind of a flat day, but maybe we'll get some fireworks later on today. Maybe there'll be some movement in this market after all. Now on Wednesday, we had what I call a topping tail. If you look at the IWM is the Russell 2000, the small caps. It had this topping tail where it went up and came back down. So you have this little topping tail. Now yesterday, Thursday, we had a bottoming tail on the VIX. The VIX actually went below 14 on the VIX down to 13. Now when you're at 13 on the VIX, I mean, be very careful. That's going to spike eventually and send the market lower. So I think we're reaching a top. This market has done nothing but go up for 2 to 3 weeks now, right? Straight up. Now, I do think they're going to push the market higher into the end of the year, but I do think we'll get a pullback. Now, on the S&P, we went from 4,100, shot right up to 4,500. Now, usually I look for a 50% retracement of the run up. So I do think we'll pull back down to the 4,300 before they push us up into the end of the year. Now, next week, Thanksgiving, it's a short week, a lot of low trading volume next week, a lot of people on vacation, so they can push the market around one direction or the other. My take is that they're going to push this market a little bit lower. Now, that's not normal. The week before Thanksgiving, maybe they push it up a little more before they bring it back down. Now, you get all this talk today about the soft landing. Soft landing. A lot of articles coming out. Soft landing, soft landing. Everybody's talking about the soft landing. Well, here's a recession indicator. When everybody's talking about a soft landing, the recession usually follows. Now, I am expecting a recession, quite a big recession, maybe even going into a depression era and starting in 2024. A lot of people, that's not popular. They say, but Mike, it's an election year in 2024. There's no way we're going to have a recession. My take would be completely different. I think we will have a recession in 2024. We'll see how that all plays out, but let's move over to the real estate market now. All right, so the real estate headline, Yahoo Finance, right? Mortgage rates retreat, which brings relief to the home buyers. Now, if you're a home buyers and the mortgage rates, they did retreat a little bit. They went from about 8% down to about 7.6%. I guess that's a little retreat. Now, is that bringing you relief? Does that make you want to run out and buy a home? I don't think so. Now, here's the people that need relief. It's not the home buyers that need relief. It's the home seller that needs relief. See, the home seller doesn't see what's coming. What's coming is a 40 to 50% drop in their home price if rates don't go back to 2%, 2.8, let's call it. All right. Are they going to push mortgage rates back down there? No, those days are gone. Those days are gone. And the sellers are going to have a tough time getting out right now without prices dropping hard on them. Now, Billy Bob, he got out up here. He got out at the top. But right now, prices are starting to drift lower, down about 10% in most areas. I think they're going to drop to 40 or 50% down. Okay, so far just 10%, but we have a lot farther to go now. Why do I say that? Well, you have delinquencies. Delinquencies are spiking up on mortgages. You can go to the Federal Reserve site and you can pull this information up. If you look at a chart, delinquencies on mortgages are going straight up. Delinquencies on credit cards are going straight up. Auto loans straight up. Oh, and is anybody really paying back their student loan? I mean, Biden, he's trying to get rid of all that stuff so you don't have to pay it back. But yes, everybody's delinquent on their student loan. Not delinquent technically, but just because they haven't made a payment in 3 years. But now they have to start making payments, and this is a big problem. You see, the consumer is in big trouble. Big trouble. You can look at Walmart stock. Walmart stock plummeted. Why? People can't even afford to shop at Walmart anymore. And no offense to Walmart, but they're kind of at the bottom rung, right? I mean, you might have dropped down from Neiman Marcus down to Walmart, right? Okay, where do you drop from Walmart? Where, I guess you could go, is the dollar store below Walmart? I got those about even. But anyways, the consumer's in a lot of trouble. They can't make their payments. Now, how are they going to go out and buy a house? How are the people that own the houses going to continue making their mortgage payment? Well, they're not. It's spiking up. Delinquencies are spiking up. You're going to see a lot of foreclosures. You're going to see a lot of short sales. Now, I know right now it's regional. This is very regional, right? Phoenix having short sales. Vegas, Texas, San Jose, California, short sales. Why? Because the market's free falling. The market's already down 15% in my area, and it's going to go much lower. Why? Because people are losing their jobs. People are out of work. People are starting to look for work. Now, I know in your area's up 40, 50% in the last year. Your area only goes up because your area is where all the moon boys live. I get that. And the moon boys, they're cool. They leave me the comments, but your area is going to go straight up. But most areas are going to come down by 40 or 50% unless we can get the mortgage rates back down to 2.8%. But I don't think we can. I actually see mortgage rates going to 10%, 10% next year. That's what I'm calling for. Actually, probably higher than that. Probably up around 12% by this time next year. It's going to be really frightening. I think the unemployment numbers going to be up over 10% this time next year. Next year is not going to look too pretty. I know it's an election year. I get that, but doesn't matter. They're not going to be able to save this. Yes, they're going to try. Yes, they're going to print money. And I want to talk a little bit about that. You see, it's all regional right now. The regions being Phoenix, Texas, Vegas, San Jose. Okay, regions right now. But when this becomes systematic, the whole system's going to break down. Now, why is it going to break down? Why? Okay, I want to talk about this company, this little company. It's called WeWork, right? WeWork just filed for bankruptcy. Okay, now this is fascinating to me all by itself, right? I mean, WeWork, who's the star by? This guy named Andy Newman, right? Adam Newman. Okay, Adam Newman, he comes up with this big idea. We're going to get office space and we're going to rent it out on a part-time basis, right? This was nothing new. This was nothing new at all. But he raised billions of dollars, raised about $14 billion. $14 billion of investor money to open this up. Had 90 million square feet of office space all around the world. The only problem is never made a dollar in profit, lost money every quarter, burned through that $14 billion, which is fascinating. That's all wiped out. At one time, the company was worth $48 billion, but that's all wiped out. But what happened to Adam Newman? Well, he left with over $1 billion. His buyout was $1 billion. You see, now they don't teach this in business school. They do not. I've been to business school. Don't teach this. They don't teach this, right? Okay, so you start a company, you lose billions and billions of dollars, you never make a dollar in profit, you were never profitable, and you can walk away with over $1 billion for yourself. They don't teach that model, but you know he's trying to do it again. He's got this company called Flow, right? And you know what he's going to do this time? He's going to take apartment buildings and he's going to make apartment living cool. He's going to make it seem like you own the apartment, right? So he's got this big plan. He's already raising billions of dollars for this. This guy, I mean, he can talk a great game, right? I've heard him talk. The guy's impressive. I mean, he can talk. But his business plans are nothing new. He's going to reinvent the apartment building now. He reinvented the office building, lost $48 billion, actually only about $14 billion of other people's money. He got $1 billion before he left. But he's going to make another $1 billion here, but he's not doing on anything new. But anyways, WeWork went out of business, right? They filed for bankruptcy. So 90 million square feet worldwide are not paying their rent anymore. What does this do to office buildings? Does it make the value of them go up, or does it make the value of them go down? Well, it makes the value of them go down. There's a lot of vacant office space. Okay, so these big skyscrapers you see in all the cities around the world, they're sitting half vacant right now. They're not bringing in the rent. But here's what happens with office buildings. They have to refinance about every 3 to 5 years. They don't get that 30-year loan money. No, sir. They got to refinance. They got to redo it. So this is all coming due. And here's what's happening. When they have to refinance, the rates went from 3% to 8 or 9% for office buildings. But they don't even want to give them the loans anymore because they're not bringing in rents because their building's empty. So they can't refinance. So what do? They give the keys back to the bank. What does the bank do? They have a fire sale. These things are 40, 50, 60, 70, 80% off in some instances. This is just the start. This is commercial, right? This is going to play over into the residential, which is going to bring your houses down. Now, why do I say that? Well, here's the problem. Okay, so these banks, right? The banks are out there right now. And they got these losses on their balance sheet that they don't admit to having. Okay, they got losses, right? Over $7 trillion in losses, not all from commercial real estate. Most of it's from the bond market. Bonds have dropped by 40%. So you go put your money into these banks. These banks, they invest your money in bonds. They invest them in these office buildings. These went down by 50%. Your money's gone. Your money's gone. The banks don't have the money. But here's the problem. Right now, the FDIC, you see, they've had a run on banks. We're having a run on banks right now. The banks are having runs on them, okay? Yeah, I'm telling you, you don't want to leave too much money in the banks right now. People are actually getting smart. I give the public credit for this. They're pulling their money out of the banking system. Okay, so the deposits are in free fall, but the banks, they don't have money to give you your money back. And the FDIC sees this. You see, they saw Silicon Valley Bank go down. They saw 4 other banks go down on top of that. This is Great Depression stuff. Over 10% of banks have already collapsed in the United States. That's a lot, right? 10%. It's going to be more, don't get me wrong. 10% is a lot. Probably going to be 20, 30, 40% of the banks are going to collapse. But here's the FDIC now. Okay, so they got this plan, right? They got this plan. They want to push this plan through where they tell the banks that they need to hold 16% of reserves in the bank. Now, how much reserves do the banks have right now? They're required to hold 0% banking system, right? So the FDIC knows they don't have the money. FDIC is broke. They can't pay this out. They don't have $7 trillion. The banking system is about ready to fall over. It's going to be dominoes when it goes. But the FDIC now, they don't want to get blamed, so they're looking for the scapegoat, right? They're looking for a scapegoat. They're going to say, hey, we said to the banks that they should get 16% of reserves, held them. But here's the thing. The horse has already left the barn. The horse is out of the barn. Let's go close the barn door. No, the horse is already out. Look at the problems already there. They lost 50% of the money, and the FDIC's coming up with this plan that they have to bring 16% in reserves. Look at, they don't have any money. Okay, what's this going to do to credit? It's going to freeze up the credit system. Credit system's going to lock up, right? It's going to freeze, and this is a big problem for the housing market. Nobody's going to be able to get mortgages. Why? Because the banks don't have any money. The FDIC wants them to bring 16% in reserves in. They don't have the money. They're down 50%. They have a $7 trillion with a T, $7 trillion hole in their balance sheet right now. But here's the beauty. The way accounting's done, they don't have to mark that down. They don't have to let the public know there's $17 trillion in the hole, because what would that do? Cause more bank runs. Everybody be running to get their money out, which would probably be a really smart thing. You don't want to be the last one to get your money out because there's no money. First one's going to get his money out. It's kind of like Billy Bob. Billy Bob got out up here. Look, market, the next person down here, the next one down here. You can chase that all the way down. 50% may be conservative number for how far houses are going down. But the banking system, they don't have 50% of your money, so 50% of the people aren't going to get their money. The FDIC has less than $1 for every $100, less than 1%. So if 1% of the people want their money back, the FDIC is already broke. This is not going to end well. This picture's getting scary. I know it's Friday and I always get carried away on Friday with the scary stuff, but I'm telling you, the banking system is not safe right now. You can tell that just by the FDIC, they're looking for the scapegoat, right? They're going to come out and say, hey, we told you back in July you need to raise the reserves. Look at, they don't have any way to raise the reserves, right? They've lost your money. They're running out of money. There's a bank run right now. The public's pulling the money out of the banking system. Not going to end well, not going to do well for your house. Houses, moon boys, I'm sorry, they're not going to go to $1 million like your Bitcoin is. They're going to come back down off 40, 50%. Just my take. I'm Tall Mike. If you like this stuff, give me the thumbs up, punch the subscribe button, tell someone about the channel so we can grow our community. Get out there, everybody. Have a great weekend. Bye-bye now.